and welcome to Money Puzzles Live. We're a brand new show here on Money Talk Radio, and we are here to help you. We are designed to help you put the retirement pieces of your puzzle together. My name's Chris Maxey, and with me, my co-host, Sean. How are you?
I'm doing great, Chris. Yeah, when people come into our office, oftentimes our first question is, tell us about your retirement plan. And when people tell us about their retirement plan, often that's, well, I have an IRA, or well, I'm going to take Social Security at age 65, or I have a pension, or whatever. And what we see is that those are all pieces of the puzzle. But what we see is that most people don't have a comprehensive, holistic retirement plan that pulls all of those pieces together and shows them the picture on the box.
Yeah.
And that's exactly what we do.
That's right. I mean, so many people spend their whole lives putting money in. They spend 30 years putting money into their 401k, into their IRAs. But the question is, how do you get that out, and where do you draw from first? That's how we put all the pieces together to figure out, should you take Social Security early? Should you take it late? What's the plan there? A lot of folks do not have that plan. They've done a great job being diligent and putting in, but retirement's a whole nother ballgame.
Yeah, that's what we see, is that oftentimes, we've heard this multiple times, Chris, so I've been putting this money in, but I have no idea how to get it out or how to create income out of this lump sum. And most people are used to getting paid small increments, a little bit, every 2 weeks or every month or every week, however you're paid. And then all of a sudden they get to retirement and they have this big lump sum. They have this big chunk, more money typically than they've ever had in their entire life. And now they've got to turn that big chunk into small payments.
Your retirement years are completely different than your working years. In your working years, you know who's paying you, you know how much they're paying you, and you know when they're paying you. Well, in your retirement years, maybe you have a 401k, maybe you have IRAs, maybe you have a Roth IRA, maybe you have a pension. You have all of these different little jars, or big jars of money, but how do you get to that effectively and diligently? So that's where having that plan is really essential to your long-term success.
Yeah, I've heard it put it this way, that that when you enter retirement, you enter with a carton of eggs. One egg is Social Security, one egg is maybe a pension, IRA, 401k. And the key to retirement planning is figuring out which egg we need to crack first. And that's the important thing, is to be efficient in retirement. It's figuring out which egg you need to crack first.
Sean, let's get into it now.
All right, let's do it.
I'm excited because we're entering one of my favorite seasons, Sean.
Oh boy.
We got college football season.
Yeah.
We got March Madness.
Yeah.
We got the NFL.
Well, not for Bucks fans.
It's
That's
tough.
probably not one of your favorite seasons.
It's a tough season, but we got Lightning right now.
Yeah, hockey season is a big
It's
so
time.
funny. When I moved to Tampa,
Yeah.
It is so interesting to me that the Lightning are the only team that Tampa Bay cares about.
They go crazy for them.
They love the Lightning.
It's great. It's a fun time. It's a great atmosphere. We got, some people love hunting season, right?
Yeah.
We have all these different, well, we're in Florida. We don't have 4 seasons here. We got 2.
Yeah.
We got cool and hot.
Mild and hot.
Mild and hot, hot, hot. That's right. But what we have is a season that every single American has to participate in. Any ideas? You know it. Tax season.
Yes, tax season.
Oh, yeah.
You know it. You love it. It's time to dust off those calculators, folks. It's tax season.
That's right, baby.
Chris, I love this. Dave Ramsey, we're following Dave Ramsey. Why don't you count us down? Let's hear a tax season scream.
You got it. 3,
2, 1. It's tax season!
That was dramatic.
It really was. Well, tax season is probably not that dramatic for you, but some of you may even dread this time of year. It's just one extra thing you have to do, stacked on top of your already busy life. So today we want to give you a few ideas that could potentially help your overall plan when it comes to getting your taxes ready.
Let's do it. Let's talk. So we often, this time of year, we're getting call after call, email after email to figure out what forms people need and how they're going to take it and how they're going to make sure that they get the IRS off their back and give the IRS exactly what they want. So let's talk about IRA contributions. What are they?
Yeah, so you can make IRA contributions either to traditional or Roth IRA throughout the tax year, but the government gives us like a little extension. So if you're trying to make a IRA or Roth contribution through, you could make those through 2019, and then after 2019, they will actually give you through April 15th to contribute to your April 15th of 2020 to contribute to your 2019.
So what you're saying is, if I want to contribute to my 2019 IRAs, I have January 1, 2019, all the way to April 14th, 2020.
Yeah, it's actually April 15th.
April 15th, 2020. You have that entire period to put into your IRA or your Roth IRA.
Yeah, so we've talked about this a few different times on our show, but let's just talk a little bit about the difference between the Roth and the traditional IRA.
Well, how much can you put into your IRA or Roth IRA?
Yeah, it's nice because in 2019 it just went up. So
yeah.
You can into a personal Roth or traditional IRA, the limits are $6,000.
Right.
$6,000 for 2019.
For 2019, and I believe it actually even went up even further in 2020. But we're still doing 2019 taxes, so we're going to stick with that $6,000 for this year. Let's talk about this. So if you have both an IRA and a Roth IRA, can you contribute $6,000 to both?
No, and that's an important thing to note is that you cannot contribute $6,000 to both your traditional IRA and your Roth IRA. You can only put $6,000 in total. Now you can contribute to both, I assume. You could put $3,000 in traditional and $3,000 into Roth, or you can do $6,000 in one or the other. You cannot contribute more than $6,000, because basically why that is, I believe, is that these are tax shelters from the government. Either the money is going in tax-free, so we're not paying income tax on that portion in a traditional IRA, or they're going into Roth, and that money, yes, we're paying tax on it now, but it's growing tax-free. So there's some incentive in these tax shelters with traditional and Roth, and that's why the government's not going to let you put an unlimited amount in per year.
Well, that makes sense.
They need that money.
They got to have it one way or the other.
Yeah.
They got to have it. So let's see this. Why would someone contribute to a traditional versus contributing to a Roth? Let's talk about different strategies and ideas there.
Well, I tend to agree with Dave Ramsey. I am a proponent of Roth IRA primarily for two reasons. One, you can put more into a Roth IRA. Now, we just said that you can only do $6,000 in your traditional or your Roth. However, because taxes are paid before it goes into a Roth, mathematically, you're actually putting more in, because when that money comes out, it is tax-free.
Right. And the fact that it's growing after taxes, right? So you put it in, you get the tax, and then it grows. If it's 30 years, 20 years, 10 years, 5 years, that's all growing. And then when you take it out, the taxes have already been taken out on the front end.
Yeah, so we are growing that money tax-free, which is going to be a huge, to my second point, that's going to be a huge benefit, primarily because I don't have to really convince people that tax rates are likely to go up in the future. Maybe not this year, maybe not next year, maybe not in the next 3 or 4 years. But my goodness, with the looming national debt, I got to believe that the taxes have to go up in the future.
Well, and we know that with the Jobs Act of 2017, they actually, the tax rates were lowered for a lot of Americans, between 3 and 4%.
Yeah, so now is the best time to pay taxes now, contribute to your Roth IRA, and because we feel like taxes are on sale. When's the best time to buy something, Chris?
When they're on sale.
That's right. So
Black Friday, Cyber Monday.
Yeah, absolutely. So we feel that right now is probably the best time to contribute to a Roth, just because taxes are on sale. Now, what would be the only thing I can think of why you would contribute to a traditional IRA? Maybe you had a spike in income. If you're in sales or you're in some kind of
might not be able to.
Well, a traditional IRA, you might not be able to contribute to a Roth if you make too much money.
Mm-hmm.
So If you make too much money, that would be a reason to contribute to a traditional IRA. If you had a spike in income one year where you just had a big spike in income and you're trying to save money on taxes for this year in 2019, then that might be a reason to contribute to traditional IRA, because you can put $6,000 in your traditional IRA and you don't pay tax on that money this year. So if you jump up into the 30% tax bracket, then that might be a time for you to contribute to that traditional IRA to save money on taxes this year, or excuse me, last year, 2019.
Yeah, that makes complete sense to me. I think that's something that a lot of people often, when they're doing one thing, they don't think, okay, well, let me switch up this year. I've made too much, or let me make some changes to make sure that I'm not putting all my money in one basket, right? I'm diversifying my tax status with my different investment strategies.
Yeah, that's right. And so that's one thing we work on, is helping people diversify not only their investments, but also their tax status. So that's going to be something that's really, really important. And because we often see that people get to retirement and all of their assets, nearly all of their assets, are in 401k or IRA tax deferred vehicles. And if we see taxes go up, they're going to be in big trouble.
Big trouble. 5%, 10%. That could be a major issue for people if they put all of their money into their 401k or their traditional IRAs. That's where people run into trouble going into retirement.
So if you haven't made those IRA contributions, either Roth or traditional, please call us, 813-502-1228. Again, that number is 813-502-1228. You can find us on Facebook at Brookstone Financial Tampa, or visit us online at brookstonefinancial.com. And hey, we will email you a copy of our tax and retirement guide. So like us on Facebook, or send us a message on brookstonefinancial.com.
Hello and welcome back to Money Puzzles Live. Today we are talking about the season that every American has to participate in. We're talking about tax season, folks. We want to make sure also, Sean mentioned it before the break, if you don't know all the rules, we have a helpful tax and retirement guide that we send out to a lot of our clients that just says, hey, how much can you contribute to your simple, to your SEP, to your traditional IRA, that has all the different rules on it. So let us know, send us an email, and what we'll do is we'll get that sent out to you. You can check us out on brookstonefinancial.com and send us an email, and we'll get that tax strategy out to you. Hey, Sean, I wanted to say this. We have a lot of our clients who have put money into their 401ks. Maybe they've been at that job for 10 years and then they switch to another job. But when you have a 401k and you switch to an IRA, how does the IRS see that? Is that a taxable event?
No, so that's called a 401k rollover, and there are 3 opportunities where you can roll over your 401k to an IRA. And we would recommend that. Dave Ramsey recommends that. We would recommend doing that when you have the opportunity to do that, because in a 401k, you're typically limited to in what you can invest in. Mm-hmm. When you move to an IRA, you are unlimited in what you can invest in. That's an individual retirement account. And we use this analogy all the time, that, you know, when you move from maybe an apartment to your first home, do you leave your furniture in the apartment?
You're not leaving your furniture. You're taking it with you.
Exactly. So you wouldn't leave your assets at your old employer's 401k. You're going to take those assets with you and roll those over into your own personal individual retirement account, also known as an IRA. So those 3 points, those 3 times when you can do that is, 1, if you're 59 and a half. Mm-hmm. Anybody over 59 and a half typically has the ability to roll over their 401k to an IRA.
And again, it gives you more options, right? You've put money in for years with the limited options that you have in your 401k company, but when you roll it to an IRA, it just opens up the possibilities to you and allows you to really match your investments with your overall goals.
Absolutely. The second thing is that if you ever separate service, so if you leave the company, if you go to another job, the old 401k with that other company, that you can roll over. Now, you don't have to be 59 and a half if you leave the company. If you leave the company, then you can roll over your current 401k or your old 401k, excuse me, into an IRA.
That's right.
And the third thing is if the 401k company changes providers. So they were using Fidelity, now they change and start using Vanguard. You can roll that old Fidelity 401k into an IRA.
And so you roll it from a 401k to an IRA. This is it's a 401k rollover. It's not a taxable event because it's going from a pre-tax to another pre-tax investment there. So
yeah, we get this question a lot. Can I roll my 401k to Roth? Well, you can, but I wouldn't advise that. And the reason being is you're going to pay ordinary income tax on the entire amount.
Right. Systematically doing it might make sense.
Absolutely.
However, if you do the whole thing at once, that's going to increase your overall tax bill, which could put you into some potentially deep waters and big trouble, and the IRS is going to come knocking. So systematically doing it, it probably makes sense. Again, that has to go into your overall planning and doing that correctly. So we work with a lot of CPAs, and CPAs are very important, and they know the rules and they know the strategies. But Sean, what's the role of a CPA right now in tax season and throughout the year?
Well, think about when you take your tax documents to a CPA, their primary objective is to save you money on last year's taxes. So a lot of people are just getting their 1099s, they're getting their W-2s, they just got them at the end of January, they're getting everything together and they're getting ready to take those over to their tax professional or their CPA. And their CPA's job is to take all these documents, plug them into the system, and to save you money on taxes last year in 2019. That's their role. I'm going to save you as much money as I can on taxes in 2019.
They're looking in the rearview mirror.
Always. That your CPA or your tax professional is always looking in the rearview mirror. You take them your documents, and those are last year's documents. So they're looking at last year, and they're trying to save you money on taxes last year. They're looking in the rearview mirror. You're exactly right.
So that's a terrific thing, and that's great. But what you need is someone looking through the windshield, right? Someone who has the map, the course laid out for you, right? You need the GPS to say, we're going to go this far and get and then get some gas and then continue to move forward. But you need someone looking through the windshield, seeing where you're going and creating a plan on how to get there.
And oftentimes we see people taking almost exclusive advice from their CPA. Oh, well, put more money in your 401k, put more money in your traditional IRA, save money on taxes now. Yeah. And the old line of thinking is, well, you'll make less in retirement, and so you'll pay less in taxes in retirement. That would work if tax rates were steady.
That's right.
But we don't see that throughout history.
No, throughout history, we do not see that. And in fact, right now, we're seeing some of the lowest income taxes that we've seen.
Yeah, so you can, if your only goal is to save money on taxes this year, a traditional IRA and pumping as much money into your 401k is the best idea. However, what kind of implications is that moving into retirement? Is that going to cause a mess down 10, 20, 30 years down the road when you get to retirement?
There's a big potential for that,
especially if tax rates go up.
Oh, yeah, that is definitely the case. And we're not here to bash CPAs or what they do. CPAs are a vitally important part of your planning. CPAs are good people, but their job, again, is to not look forward. Their job is looking back to make sure that they're taking care of your 2019 financials.
So you need both. I mean, you need both. You need a CPA or a tax professional, especially if you have K-1s or if you have a side hustle or some kind of extra business. Oftentimes you're going to need a CPA to help you walk through what is the best structure for your business and what's the best way to save money on taxes. However, that alone can cause problems when you get to retirement. So we recommend you definitely need both. You need a good CPA working alongside a good financial advisor that knows retirement planning. And that's key because we got a lot of financial advisors out there that call themselves financial advisors, but are just either investment advisors or even worse, insurance agents.
Yes, yeah, that's if you're a hammer, everything's a nail, right? If you're an insurance agent, everything requires insurance, right? If that's your only tool, you're going to use that tool as effectively as possible. However, that could be detrimental.
Yeah, you can't use a hammer on everything.
You can't.
I try as hard as I can sometimes.
Yeah.
But it doesn't. That's why I'm not a great construction worker.
So, I mean, we often talk about in our personal lives, in our business lives, we have different goals, right? You have a 5-year plan, or a 10-year plan, or a 25-year plan. So what the financial advisor's role in this is to get with, and if you haven't talked to your financial advisor about this, about what your 5-year goal is, what your 10-year, what your 25-year goal is, then that's something that you definitely should bring to the forefront and figure out what exactly you want and what exactly you need over the course of your life.
Yeah, so the simple question of, should I contribute to my Roth or my traditional IRA? That's how we started this conversation. It's tax season. You only have till April 15th to get those IRA or Roth IRA contributions in for 2019. And that is a complicated question because it's going to be different for every individual, and it needs to be customized to your tax strategy. So the only way to answer that question is by developing a plan.
You're definitely right. And I would say, if you have not put into one of these already, now's the time. You have until April. Max out your Roth or max out your traditional. It's the time to do it is now, because you are running out. And really, the best time to figure out your planning is right now as well.
Yeah, it's a good time to sit down with your financial advisor and go through how diversified your tax status is on your investments. We're talking taxes now because it's a hot topic, but now is the time, because if you've been pumping money into your traditional IRA or 401k and you've been deferring those taxes, it may be time to start transitioning to a Roth IRA, and maybe even converting to a Roth IRA. And that's what we look at for people and their plans, is how can we be as efficient as possible with taxes. So if you'd like a complimentary consultation, there is no cost to that, and we offer those all the time. You can call us at 813-502-1228. Again, that number is 813-502-1228. We kind of have this quick guide. It's a 2-page guide on taxes and retirement guide, and we would be more than happy to email you that. You just go to our website, brookstonefinancial.com, and there's a link up at the top that says "Let's get started." You give us your name, your email address. We would be more than happy to email you that taxes and retirement guide. Again, that's brookstonefinancial.com.
Check us out on Facebook as well at Brookstone Financial. That's Brookstone Financial. Check us out on Facebook and just see what we're up to. But hey, it has been a great show. We're excited to be here. We're going to be back here next week, Thursday at 8 o'clock. We'll see you then. Thank you, sir.